It is a good morning, and today we won 200 bucks. That is not nearly as much as I think it should have been, but we made some mistakes. It's a very volatile Friday because of CPI, and let's discuss what happened. So, of course, we had CPI at 8:30, and my analysis was all the way back from Tuesday that this high would be taken. And yes, I called it in my video that on CPI, this high would be taken. And guess what? It was. Call it lucky if you want, but I am quite happy with my analysis. So it went down and now it came back up for a nice market maker buy model. And yeah, I'm just kind of happy with how I called it 3 days earlier, because I usually don't even analyze for 3 days in advance. But this time I did, and we got that analysis playing out. So that doesn't matter. Even if you're right, you can still lose money. So let's investigate what happened today. So we had 8:30 over here. I was expecting it to not take, or to take this high. So when it didn't take this high, and even up here, I was like, okay, so at 9:30 we can take it up into the highs and potentially look for more. So yeah, we had 9:30 over here. We waited. We were looking for this fair value gap to be respected. There's some fair value gaps up here. That's way further in premium. So I had everything drawn out, of course, and I was just waiting to see which one would be respected. So this one got filled to the tick, and then we had some signs of strength. So we had a tiny little fair value gap over here, which is the reason I got stopped out a few times. And then we had this order block, which makes a lot more sense for it to be used, since this fair value gap is in premium in comparison to this. So it came down here, and then it formed some fair value gaps, some more fair value gaps. This is the fair value gap I took into a run of this high, and my final TP would have been up here, but we got stopped on our runner, and that is completely fine by me. I am all about taking those base hits. I don't need to pass my account within 1 day. As long as that equity line is slowly going up, I am happy, and I'm just trying to not make too many mistakes and pass the account eventually. So let's look at what trades I took. So today we had a lot more stop losses than usual. And that's okay. In the end, we did still manage to squeak a profit of 230 bucks. Okay, it's not loading. I don't know. We'll just look at the trades one by one. So the first trade I took was right over here. So as you can see, this is at 16. This fair value gap is at 16. And by 16, I mean 18,316 right here. This fair value gap is at that price level. We waited for it to be respected, and it formed a 5-second fair value gap right in here. So I really didn't like this price action, to be honest, after this, but I couldn't trail my stop fast enough, and we got taken out for $140. I definitely could have managed this trade better, but that's a learning experience, and it's okay. We will take stops from time to time, and I think this should have gone break even as soon as this high was taken out right here, and maybe even to this mean threshold right here, because there's a volume imbalance up here. So we got stopped out. It came down to this lower fair value gap. So it's in no particular rush today. As you can see, this is very slow grinding upwards kind of price action. So it's not the fast explosive ICT runs that you're used to. And yeah, that's probably because we're at all-time highs. It's Friday. We had a big move, and now we're just chopping a little bit. It's not in any particular rush to take out any liquidity. It already took this out, which is all-time high. So yeah, also probably by the end of this video, my final TP would have gotten hit. But we're not going to worry about that right now. We're going to look at the next trade, which I took. After some waiting, we had this return into this fair value gap, which was here, I'm pretty sure, 45. Yes, indeed. This is the 1 minute fair value gap. That is my strategy. I wait for the 1 minute fair value gap to get hit, and then I wait for a 5-second fair value gap. So we entered on this 5-second fair value gap. After this return, to the 1 minute fair value gap, and we got stopped out for $125. This is not even taking into account the commissions, but that's okay. It will happen. My stop should have probably been underneath the 1 minute fair value gap if I didn't want to get hit. But I would rather take small losses and then re-enter than have the potential of taking a big loss and then not know what to do. Because this way the risk is managed. I don't care what it does once it doesn't hold this fair value gap, and I'm going to wait for another one to form. So over here, I noticed we were getting stopped out more often than usual. So on this next fair value gap, this time I made sure that ES was actually in sync, because when it's high probability and low resistance and it's moving fast, you can just trade one chart and you're going to be completely fine, especially if you're using multiple time frames. But when it's a little bit choppy like this, you do want to take into consideration what the ES is doing. So this time we got stopped out over here, right? Because you can see on the ES, there's equal lows that have not been taken. So boom, right there, when it takes it and enters this fair value gap, that's when we got stopped out over here, right? So then on this next fair value gap, you can see ES has already come back and tapped this fair value gap and is making its own bullish fair value gap. So this time I long again, and it actually starts showing signs of strength. So my stop is under here because there's another fair value gap, and that fair value gap does come and get tapped. And once it does and another one is formed, I am long again. So I don't know why I longed the highest point of this candle. I thought I waited for this re-entry into the 5-second fair value gap, but apparently I didn't, and that's honestly, that's okay. It's close enough. It's like 2 points difference. Yeah, so then we were targeting the all-time high at 77.75. I just rounded my order to 80 because as ICT says, nice big round numbers usually get traded through. So we actually managed to squeak a very nice profit of $445. And if you've been paying attention, you know that actually covers all of the losses and then some that we took for the day. So $445 right here, and we basically got out at the high. And then at this point, I was kind of shaking because my analysis all the way back from Tuesday had played out. We were at all-time highs, and I knew, like, I was trying to hold it up here. As you can see, this did actually get traded through. So high 18.5, 19. Okay, so almost, but it's about to get traded through. So I would have gotten, instead of off at 70, I would have gotten it off at 20. So that's another 50 points or $1,000 on this contract. However, I was shaking because and I was really nervous because my analysis from Tuesday played out. I took a few stops this morning, which I wasn't expecting. And then when it finally went in my favor, I just didn't want to take a loss. So I just trailed my stop really tight. And as you can see, we got taken out right here. So this contract was at 80, this contract was at 70. So if we took both off here, we would have gotten $200 more, but that's completely fine. This is okay. I would love to get a look at this for free, but we got stopped out for $200 less. That's fine. What I really should have done is I should have just left it at break even or under this fair value gap right here, this one, because I really like the way that this was respected. It didn't waste any time here. It just went straight up. And yeah, so I got stopped out on this because I was trailing it tight. I didn't want to give back any profit. And yeah, ultimately we would have gotten all of this run up, but on a better day that would have happened. Today we're just taking the small base hit of $230. Yeah, let's look at the other analysis. So from here to here, this whole range is like 80 points, right? We got in here for 30 points and we made $600 on 2 contracts because we entered at 60 and we got out at 80. So we got 20 points. That's why you want to trade big ranges, because then you can have small stop losses. And while this was a small movement, it was a high risk to reward. And yeah, this was the analysis. We had the fair value gap from CPI, and we had these equal highs stacking up, and we're at all-time highs. So as soon as we see this holding, we are ready to long it, and we're just waiting for our entry model to form. And yeah, this is the swing that I chose to project, and as you can see, we're hitting that perfectly. Did we get this yet? High 18.5, 18.25. So not quite, but since these equal highs are stacking up like this, there's fair value gaps in here, I'm assuming that we're going to get this buy side. But yeah, so not an amazing day. I was right, but I didn't make that much money. But that's a learning experience, and at the end of the day, we did take a small profit, and the account is now at $2,100. So we are getting closer and closer to getting funded. And yeah, I was just really nervous today. Also, another thing I wanted to mention is that look at these candles. We had 5-second candles that were larger than 10 points. Like, look at this data box. Yeah, so the high and the low are 12 points apart. Like, usually my stop is like underneath the fair value gap, so it would be one candle. But these candles are huge. Like, look, we took 140, 140, or 125. So we were taking some big losses today because of the volatility from CPI. So that's why I was only trading one contract. Usually I would be trading two, and over here we did pyramid in once we saw that our trade was right, so we did take our two contracts. But yeah. Oh, by the way, I forgot to mention, I think there's another loss in here. Yes, right here. So, yeah, I only noticed two of them, but we actually had three losses. That's what I thought. So we had another 5-second fair value gap right here. But this had not yet fully... Yeah, actually, no, it had. This was an okay trade, but it just didn't work out. So we took another stop for $100. And usually these stops would be way less, but because it's CPI, the candles are huge. So this one, even up here, my stop was down here. So this was also a 10-point stop. So we would have had like a bunch more losses if we kept losing. Like if I lost this, I probably would have stopped for the day. Also because after that, my target got hit. But yeah, so a little bit crazy. As you can see, I'm a little bit new to this. I haven't traded CPI days that much before, so they're very, very volatile, but I really didn't want to trade micros. So yeah, we were just being safe with our one contract, and then we pyramided. So yeah, that was a lot of rambling, but at the end of the day, we managed to get a little profit. Yeah, okay, there we go. It got hit. So yeah, I would have been out for an extra 50 points right here, 40 points, close enough. But hey, it's Friday. We won. I'm happy. It's sunny outside. And I'll see you guys next week.